Hello, friends. Imagine this. It's a cool evening and you're watching the first presidential debate between Trump and Biden. The stakes are high and every word being said matters. But what if you could turn this political showdown into an investment opportunity? Today, we'll show you how you can position yourself for a potential Trump win in the upcoming US elections. This could change your financial future. What do you think about the debate so far? Let us know your thoughts in the comment section below. Now, picture this. Millions of Americans are glued to their screens watching Trump and Biden clash on the economy, healthcare, climate change, social issues, foreign policy, and obviously the COVID-19 pandemic. It's like a heavyweight boxing match, each candidate delivering powerful punches. The debate hall is intense, the audience on the edge of their seats, light shining on Trump and Biden, their voices echoing with tension. Trump criticizes Biden's economic policies, claiming they fueled inflation and hurt everyday Americans. Biden defends his efforts and outlines his plan for economic recovery and support for working families. The tension is palpable. They move to healthcare. Biden talks about expanding access and making healthcare more affordable. Trump, on the other hand, counters, saying Biden's plans are too costly and ineffective. The next is climate change. Biden dreams big, envisioning net zero emissions by 2050. Trump, although, remains skeptical, focusing on clear air and water instead. They debate social issues and foreign policy. Biden emphasizes social justice reforms and stronger international alliances. Trump sticks to his America First stance, prioritizing American interests. COVID-19 is another hot topic. Biden accuses Trump of mismanaging the crisis. Trump defends his response, highlighting his steps to protect the nation. A pivotal moment comes when Biden appears less sharp, raising questions about his cognitive abilities. This shift impacts betting odds, with Trump gaining ground and Biden losing support. Speculation arises about other Democratic candidates like Kamala Harris or Michelle Obama. Remember the last time you felt so uncertain about your future? That's how many Americans feel right now, and that's why these strategies are so important. Now that we've covered the debate aftermath, let's see how these political developments translate into actionable market strategies. Now, imagine waking up to the news of a Trump victory. You remember the last time he was in office and the dramatic shifts in policy. His America First policies are back, with tougher immigration rules and more tariff on imports, especially from China. The US dollar in this case could strengthen. But why? Higher tariffs makes imports more expensive, reducing selling pressure on the dollar. Plus, a looser fiscal stance might keep interest rates higher for longer. So, how do you play on this market insight? Well, you could go long on the US dollar against the Mexican peso and the Chinese yuan. Mexico trades heavily with the US and there's high migration between the two countries. China is a global trade giant and tariffs could hit them hard. But remember, currency trading is complex and influenced by many factors. Whilst this strategy makes sense, always keep the bigger picture in mind. What do you think? Are these policies enough to strengthen the dollar? Share your thoughts in the comment section below. Now imagine Trump's administration rolling out tax cuts and government spending to boost economic growth. You can almost see people with more money in their pockets and businesses ramping up investments. It sounds great, right? But there's a catch. Higher spending and lower taxes can lead to higher inflation, and if inflation rises, the Federal Reserve might keep interest rates higher for longer. This scenario could lead to a steeper US yield curve. Long-term interest rates rise more than short-term rates, making borrowing more expensive in the long run. Think of it like this. Borrowing money for a longer period becomes more costly than borrowing money for the short term. To capitalize on this insight, consider buying steepeners. This means selling long-term bonds and buying short-term bonds. If the yield curve steepens, you could make money. And of course, there's a risk of inflation. If inflation doesn't pick up as expected, this strategy might not necessarily work, but given the current trends, it's a valid approach. Have you ever tried bond trading? How has your experience been? Share your thoughts in the comment section below. Now, let's talk about stocks. Trump's administration argues that deregulation can spur economic growth. Less regulation means banks can lend and invest more freely, boosting their overall profits. Imagine a world where banks have fewer compliance burdens, they can increase lending and investment activities, driving their profits higher. So, which stocks should you be looking at? Well, the answer is pretty simple. That's the banking stocks. The financial sector SPDR fund or XLF ETF and individual stocks like Citibank could benefit from this environment. Banks thrive in high interest rate environments as the spread between the loan rates and deposit rates grows. But be cautious. Not all inflows into banking stocks are due to Trump's win expectations. Some investors consider other factors. So watch out for sustained inflows before jumping right in. Are you a fan of bank stocks? Tell us why in the comment section. While these strategies are exciting, they're not always without risks. Currency trades can be volatile, influenced by global events. The steepener trade depends on inflation trends, which can at times be unpredictable. And banking stocks, while promising, can be affected by broader market movements and regulatory changes. So, stay informed and ready to adapt your strategies as new information emerges. This market is unpredictable, and flexibility is the key to staying ahead. So there you have it, folks, a potential roadmap for positioning yourself in the market if Trump wins the upcoming elections. From FX trades to bond strategies to banking stocks, there are several ways to navigate this landscape. Well folks, if you found this video helpful, don't forget to like and hit that notification bell to stay updated. Until then, stay safe and I'll see you all in the next video. Bye for now.